Welcome to Conversations, Season 2 of the MTA Podcast Series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association.
February 27th, 2012. This is Conversations, the official MTA podcast series. And today's guest from UBS is Peter Lee. Peter has over 20 years experience in the financial services industry, including 13 years with UBS. Prior to becoming Chief Technical Analyst for UBS Wealth Management Research, he held various analyst positions for Payne Weber, Lehman Brothers, and the American Stock Exchange. Peter and his technical research team provide UBS financial advisors with long-term as well as short-term technical strategies, sector analysis, risk management strategies, and individual stock analysis. Peter has been quoted in various regional and local financial publications, including the Wall Street Journal. His research has also been featured on Bloomberg, and he frequently presents to financial advisors and client audiences across the country. Peter holds a BA from New York University with a dual concentration in economics and computer science. Peter Lee, welcome to the program.
Thanks, Ed. Thanks for inviting me to your MTA podcast.
You're welcome. We're absolutely delighted to have somebody in your position with us today or any day. And we do appreciate you taking the time out of what I know is a busy schedule. Peter, it's been a while since I've done one of these interviews. And so, if memory serves, we typically like to start with some personal history, some background. What happened to Peter Lee prior to UBS that got him there? Can you start us off with maybe, where'd you go to school? Where'd you grow up? What interest you had prior to technical analysis? I'll just put that in your lap and let you take it.
Sure, Ed. Let me take you all the way back to my college days here. I grew up basically in New York City, parents from Hong Kong, and with typical Asian American. Parents want us to either be a doctor or a lawyer, the typical doctor or lawyer. So I was a pre-med in college, actually. But since I grew up in New York City, and during the time where I grew up in New York City, all my friends were moving towards Wall Street, trading, investment banking, and so forth. So I decided to bypass this pre-med program and move towards economics and computer science. So I got my degree from NYU, a dual major in economics and computer science. So I could have gone either direction, because back when we graduated back in the 80s, mid-80s time frame, technology was becoming a very, very interesting field, but then Wall Street pulled me in. And so my first job out of college was on the floor of the exchange, the American Stock Exchange. So coming out of college, I did a lot of reading and a lot of textbook reading and so forth, but no practical experience in trading. So they threw me down the floor of the exchange, learned the business. So I spent a good 6-7 years in that position, sitting side by side with the specialists, the traders, the member firms, and so forth, trying to better understand what they look at, what drives the market, why do they buy stocks, why do they sell stocks, why do they buy positions at certain levels, and so forth. And it was very, very interesting that some of the more senior specialists or the senior traders that's been around for 34 years, like Art Cash and so forth, they would pick up a chart book, and I would go and talk to them. I said, why are you looking at a chart book? And they would say, the chart knows where the market's headed, where the stock's at. So I was wondering, what does that mean? Because I'm coming in out of college, I have no working experience in Wall Street, and they're saying something I don't understand. Mm-hmm. And they said, look at the chart, and if you can understand the chart, you have an advantage over your competitor. So after several years sitting side by side with them and look at them and working with the more senior and more experienced specialists on the floor, I got the message. They have the limit order book, so they see the supply and demand coming into a particular stock. They have a monopoly on a stock position, and they use those charts to gauge where the demand's going to come from and where the selling is most likely to occur. So I spent a good 6 years there working with them. And then in my second job coming out of the stock exchange, I worked for a firm, Shearson Lehman, which was owned by American Express at that point in time. Mm-hmm. So I sat on the trading floor, working with a lot of the traders and portfolio managers and sales managers. And we service pretty much all the major institutions, the major hedge funds, or the mutual fund money managers on the street. There are clients of Shearson Lehman. So I spent a good several years there, 2 years or so. And again, the most astute trader, the most astute portfolio manager or hedge fund uses some form of charting. Now, they may not master technical analysis or master charting, but they look at the charts. So the most successful hedge fund money managers, most successful portfolio manager that we dealt with had some understanding, some basic understanding of chart reading or technical analysis in its most primitive form. So I spent a good several years there, and then I went over to work in the technical research department of Shearson Lehman under Jeff Weiss. So there was an opening there. He asked me if I wanted to go over there, and so officially went over there and started running research, technical analysis research. And at that point, Shearson Lehman was pretty big. We had the backing of American Express and so forth. And after a couple of years, we went over to Payne Weber, moved over to Payne Weber. And then obviously, that was retail, trading now. So we spent a lot of time working with a lot of retail brokers, mom and pop retail Main Street USA investors. So I've been here off of the UBS merger, UBS Payne Weber merger. So I've been here for the last 15 plus years or so. So just to sum it up, downstairs trading on the American Stock Exchange, smartest specialist on the floor uses some form of charting. The biggest portfolio managers on the institutional side, the hedge fund side, long buys, money managers use some form of technical analysis, and obviously the smartest financial advisors and retail investors that we deal with uses some form of technical analysis to help them make better decisions as to whether to buy or sell stocks and so forth.
Mm-hmm, mm-hmm. All right, so that brings us up to UBS, I guess. Let's start by defining exactly what it is you do. I know I touched on that in your bio, but anybody that's acquainted with the technical analysis team at UBS is aware of a couple other names in addition to Peter Lee. For example, Michael Reisner and Mark Mueller. So how is it you guys have got so many people in technical analysis when the rest of the street's booting us all out the door?
UBS is a pretty big entity. We got operations all over the world, and Michael and Mark is situated in Zurich. Jason Pearl is another technical analyst in London. He services a lot of the global managers out there, and we're situated in the U.S. So we sort of service different components of UBS clients in the global arena. So we maintain our own group and our discipline. Jason is the Mark indicator. Michael and Mark uses some form of Elliott wave theory. We tend to use basic classical technical analysis. So I use a lot of the moving averages, trend lines, retracement, pattern recognitions, and so forth, which is what I grew up on over the years through the classical technical analysis side.
Okay. Well, so who would you describe as being the consumers of your research, and who are the consumers of these other groups within UBS?
We cut across different markets. Predominantly, the consumer of our research are basically retail investors in the States, basically in the U.S. So our reports are distributed to a lot of retail investors. However, I've been doing this for a long time, so we have a lot of relationship with the institutional crowd within UBS. So our reports are disseminated through the big funds on the street, or the big money managers, or the big hedge funds, or the big, the pension funds, and so forth. So we cut across the board. We're retail,
Okay.
but as well as institution.
Okay. I imagine that might make it a little difficult, or does it, as to just how detailed you get and or don't get. How much do you assume of your reader versus, how much do you feel like, gosh, I got to explain this, or it's not going to make any sense to anybody? How do you deal with that sort of question?
Yeah, it's sometimes it's difficult because you have different levels of experience or expertise in the field of technical analysis, and you would not expect a mom and pop account in Des Moines, Iowa, or Main Street, USA, to be as up to speed as a professional trader on an institutional desk, or someone that runs a $1 billion hedge fund or a $1 billion long bias equity fund. So based on that, we try to mix up. We try to provide enough information for the professional trader or professional money manager to let them know where we think the market's headed, or where the risk is in the market, where's the opportunity in the marketplace. But to take it down to a level where retail investors, mom and pop accounts could understand whether we're bullish or bearish or neutral on a particular call. Sometimes it's difficult, but we try to blend a lot of our research to meet the requirements of different type of players out there.
All right, Peter, we're already down to our last 4 minutes. Can you believe that? So I've got to skip ahead through my notes here, and a couple must ask items. You write of a 2-decade-long head and shoulders top in the dollar, as well as a possible bullish head and shoulders in the S&P, with the left shoulder at the 2002-2003 low and they headed to March 09 low. These are monster patterns. Do patterns of this size have a good track record? What can you tell us about patterns that are this big? Anything to add?
For the S&P 500, we went back 200 years in the S&P 500, back to
How'd you do that?
1800. And
how did you do that?
Yeah, we got a database that we pulled up years ago, and we compiled that database. And obviously Dow didn't trade back then, but it was equivalent to the Dow, or equivalent to the S&P 500 in the 1800s. And we mapped it out, and we found very, very interesting patterns that develop. That is that the S&P 500 seems to be fairly reliable, meaning that it knows when it's overextended itself to the upside, and it knows when it's gone down too far ahead of itself to the downside. So these patterns are repeated over and over. These secular bull patterns, these distribution selling patterns, they show up over and over, probably because of market psychology and greed and fear and complacency in the market, creating these type of patterns. We found it extremely reliable, at least in the U.S. equities market. So these patterns are showing up here, suggesting to us that we probably have another 5 to 8 years worth of this sideways trading before we launch into the next structural bull market in stocks. Same pattern showing up, or opposite pattern showing up on the U.S. dollar, suggesting to us that the dollar is probably in trouble over the next several years to come.
All right. Then before we wrap up, do you have any influences you could share with us, people that you think have made a difference in your education in technical analysis, perhaps some favorite books?
Okay. One thing I've learned over the many years that I've been here is knowledge is power. And in our profession, knowledge is everything. But there's too much knowledge base out there. There's too much information because of the proliferation of the internet and Google. You can find all sorts of information very, very quickly because of Google and so forth. What I've found over the years here is that there are classical books out there. Edwards and McGee, strongly urge someone that's want to get in this profession to read some of the classical books. And it's published many, many years ago, turn of the century. But it's applicable because it studies market psychology. And market psychology in this type of market environment is crucial for traders and investors. So some of the more classical book, Edwards and McGee is a classical, Stock Traders Almanac, a lot of important information out there. And then obviously, you got the Murphy book and Old Pring and all these classical books out there. So would recommend to someone starting out in this business, read as much as possible, absorb all the information, recognizing that knowledge is the key behind a successful career in Wall Street.
All right. Well, Peter, it's been great having you with us today. Is there anything else you'd like to mention before we go?
That's about it. Just study the market. It takes experience to become a good technical analyst. It just takes experience, and sometimes it takes many, many years to reach the point where you're comfortable with your analysis.
All right. Well, that's great. And that wraps up this week's MTA podcast from SeattleTechnicalAdvisors.com. I'm Ed Carlson, together with our recording engineer, Shane Squark in New York City. Let's keep our stuff tight, everybody. Good day.